This is James Chen, Chief Technical Strategist with City Index. Today is January 26th, 2016, and we're going to be looking at the technical week ahead for five major currency pairs: the euro dollar, pound dollar, dollar yen, Aussie dollar, and dollar Canada. Before we get to that, just a quick risk notice. Financial trading carries a high level of risk to your capital with the possibility of losing more than your initial investment and may not be suitable for all investors. Ensure that you fully understand the risks involved and seek investment advice if necessary. Okay, let's take a look at the currency pairs. Here I have the euro dollar daily chart in front of me. Now, as we can see here, price action has been in a prolonged consolidation for quite some time, ever since this popped to the upside above the 108. Then it was a resistance level, now it's a support level, and this was back in early December. So we have been effectively in a consolidation since then, and this has been a lot of just sideways movement. We did see a false breakdown below the 108 support level and below the 50-day moving average, and this was back in the very beginning of this new year. But since then, it has returned above 108 and has continued to consolidate just above this support level. Now, as we can see here, price action is now just above the 108 level. As I mentioned, I am looking, as I have been for quite some time, I am looking for a breakdown below the 108 level. To possibly continue this bearish bias in euro dollar and to continue the long-term downtrend in euro dollar. But for now, we are in a consolidation, continue to be in a consolidation above 108. Breakdown below 108, I am looking for the 105 level once again, as I have been for quite some time, and this was last approached back in early December. And of course, we see these lows back here in March and April of last year. So it is a very strong support target, a very strong support level. Again, a breakdown below 108 could be looking towards the 105 level, but for now we are continuing to be in a consolidation on euro dollar. Let's take a look at pound dollar. Now, as we can see with pound dollar, very steep downtrend, and this basically started accelerating back in mid-December, and we could see this very sharp bearish trend here, and we saw a breakdown below the 142.50 level that just occurred last week, or in the last couple of weeks, and we hit a low down here right around the 140.78 level or so. So all the way down here, just shy of hitting my target at 140. I continue to be bearish on pound dollar and looking for further downside to continue this downtrend on pound dollar, looking once again towards the 140 level. Right now we see a pop to the upside, but I don't anticipate this rebound or this rally to last very much longer. If it does last a bit longer and there's further upside on this rebound, then I have strong resistance up here at the 145 level. But for now, again, I'm looking for a breakdown once again to continue this downtrend, looking towards the 140 level, and then from there, if there's a strong breakdown below 140, possibly starting to make its way down towards 136 support to the downside to continue this downtrend on pound dollar. So overall bearish bias on pound dollar, but we could see some more a bit more upside on this rebound for this currency pair. Let's take a look at dollar yen. Now, as we can see here on dollar yen, lots of stock market volatility in the past couple of months or so. We see this breakdown and a move towards the relative or perceived safety of the Japanese yen, and we see this play out on this dollar yen chart with this big break to the downside, and then we see this break below the 118 level, and then some consolidation, and then it hits my 116 target right down here, and of course 116 being a very strong support level to the downside. It hit my target at 116 before popping back to the upside on a relative stabilization of the equity markets. But I don't see this volatility in the equity markets ending anytime very soon. So I am looking for further downside if there is further stock market volatility. And for that, again, we are looking towards the 116 level once again. If there's a breakdown below 116, then looking towards the 114 level. But for now, sort of a consolidation here on a relative stability in the stock markets, but a breakdown likely if there's further volatility. Let's take a look at Aussie dollar. Now, Aussie dollar has been bearish. We saw this, it approached my downside target at the 68 level. without actually reaching it. So it approached it and then popped back up to the 70 psychological resistance level, prior support, now resistance, and it has been unable as of yet to break out appreciably above the 70 resistance. Psychological resistance level. Now, if this currency pair is to stay trading under the 70 level for a sustained period of time, I am once again looking for the 68 level to the downside to continue this downtrend in Aussie dollar, and this has been a very strong and sharp downtrend, and I'm looking for this to continue if we get down to the 68 level, which is my next target, and then from there possibly towards the 65 level to the downside on a continuation of this downtrend. For now, we have tentative resistance at the 70 psychological resistance level. If there's a break above there, then I've got further resistance up at 72, but again, I am looking for overall a longer term downtrend on Aussie dollar towards 68 and possibly towards 65. Let's take a look at dollar Canada. Here on dollar Canada, we've seen this currency pair move very closely with correlated oil, crude oil being very closely correlated with the Canadian dollar. And as we can see here, crude oil has moved up today, and this has translated into a move up for the Canadian dollar and a subsequent move down for dollar Canada. So as we can see here, we hit multi-year highs. It hit my 146 target up here, and this was back a couple weeks ago before coming back down and coming into a pullback situation. It has been overbought for quite some time, as we can see from this very steep uptrend here. It hit my 146 target before pulling back down to the 142 level, and I have key support at the 140 level, so we could be seeing further pullback on this overbought dollar Canada down to the 140 level, but overall I am looking for a resumption of this uptrend on continuing oversupply in crude oil and continuing weakness in the price of crude oil, and therefore weakness in the Canadian dollar, and that would translate into an upside move for dollar Canada, depending on what the US dollar did. But I am looking for a further upside move, a further continuation of this uptrend, possibly towards the 149 resistance level to the upside after this pullback plays out. And again, I have key support at the 140 level for this pullback in dollar Canada. And this has been the technical outlook for the week ahead. Thank you very much for your time.